Good afternoon, everyone. I'm going to give it a couple of seconds while everyone comes into the room, and then I'm going to also share my screen. Welcome. All right, let's get started. Good afternoon, everyone. My name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. We have over 1,000 locations across the country, so regardless of what state you might be in, you should be able to get connected with a local SBDC office. And you'll want to do so because we offer no-cost services to local small businesses. And they're at no cost because your tax dollars have already taken care of our fees. So you might as well partake in our resources. For the Los Angeles Regional Network, which is the network that I represent, we have several locations. You'll see them here on the map in front of you. You'll see that we're in Camarillo, Santa Clarita, Pasadena, as well as Long Beach, and a few cities in between. So again, be sure to get connected with us. Our network services the Los Angeles, Santa Barbara, and Ventura counties. Here's a deeper dive into what it is that we do. We offer no-cost business advising, and so you're able to get connected with a business advisor or business experts in various fields, from marketing and advertising to business planning, as well as licensing, permitting, and finances. And then we also offer virtual trainings, much like the training you have signed up for today. And so finally, we're here to help you. So be sure to get in contact with us. For the Los Angeles area, you can call 866-588-7232 or online, smallbizla.org/new client. And for those of you outside of the Los Angeles area, you can go to americassbdc.org/find your SBDC. With that, Mike, I'm going to give a few housekeeping rules. Please be sure to put all of your questions into our Q&A. Again, questions into the Q&A. The chat will be reserved for any links and contact information that Mike and GB might want to share with you. And with that, I will hand it over to the two of you. Good afternoon, GB. Hi, Mike.
Hi, Lauren.
Good afternoon.
GB, glad to hear you better. Let me just add one more comment. For the Q&A, please keep the questions to the topic that we're covering, which is SBA loans. Any other questions, I will defer you to an SBDC advisor or other professional to address that, because we have a limited amount of time. We want to focus on the topic at hand. All right, so with that, GB, please go forward.
Sounds good. Today we will be talking about the SBA loans. And let's see. Mike, can you see my screen?
Yes.
Perfect.
It's clear.
So SBA loans, a lot of people have heard of them. A lot of people want them. A lot of people have them now because of the disaster known as the COVID-19. The purpose of today's presentation is to share with you the different types of SBA loans that are still available to you outside of a declared disaster. Some of this information may be new to you. Some of this information may be refresher for you. So I hope and pray everybody today can walk away with something of value. Let's see. So starting off with the different types of loans. SBA loans are just one of the type of loans available to a small to mid-sized business owner. Some of the loans that are available to a lot of businesses out there are term loans, business lines of credits, invoice financing, equipment financing, and then of course the SBA loans. We will not talk about equipment financing. I will not cover it briefly because it is very varied. You're buying a car, you're buying a truck, you're buying a forklift, something you're buying, and somebody who's selling it to you may extend financing to you either in-house or outside from a different lender. So that's equipment financing. That is not the scope of today's presentation. Briefly, beyond the SBA loans, the term loans are, think of it as a regular run-of-the-mill loan. You want $50,000, $5,000, you go to your bank, you go to your lender, private, public, hard money, whatever it may be, and you say, hey, give me 5,000, 50,000, 5 million, and I will pay you back in 5 years. It's a term loan. You're borrowing money, X amount, over an X period of time to pay back interest, principal, both, or maybe a balloon payment. Usually these loans are quick to fund. Sometimes, depending upon whom you're borrowing it from, bad credit may be acceptable. Everybody has a different definition of bad credit, which is important to distinguish because SBA loans usually require good credit. Even during the COVID-19 Eidl loan process, a lot of applications were rejected because of one credit unworthiness or another. Usually these term loans require a personal guarantee. Again, it is important to know that because a lot of people are encouraged to get an LLC or a corporation because they're told, hey, get an LLC, get a corporation so that you don't have any personal liability and your personal finances can be separate from business finances. True, only if the lender is not requiring a personal guarantee. If you are a small business owner, you'll be hard pressed to find any loan out there that does not require a personal guarantee. Usually once your revenues are at least $10 million, you may be required to give a personal guarantee. So it nulls and voids any promises that you were made by an advisor who said, get an LLC or a corporation. The thing about the term loans is somebody's giving you a loan with a certain expectation that, hey, you will give me X amount of interest over a 5-year, 10-year, 20-year period. If you come into extra money, business is great, get inheritance, win the lottery, whatever happens, if you pay off that loan too early, maybe a 5-year loan in 3 years or 2 years or whatever, it may come with that prepayment penalty that if you pay it off before X date, you will still owe the interest even though you had paid back the loan. Usually SBA loans don't have prepayment penalties, so this is why also they are preferred over a regular run-of-the-mill term loan. I'm going to go through this quickly. Mike, if you have anything to add to it, please flag me down and I will stop.
Okay, I just want to address the credit issue and say
Yes.
bad credit may be acceptable. I believe at one point for an SBA loan, I think the threshold was 680. To your knowledge, has that been reduced?
Especially during the COVID disaster, it was reduced to 650. And that's what I've been advised by many people that right now, because many are suffering, 650 is a threshold that they are utilizing.
Okay, thank you. As for the personal guarantee,
yes,
that's a key point. I just went through that with someone today regarding Eidl loans. So let me just address that briefly.
Absolutely.
For $25,000 or less, it was business collateral that secured the loan. Anything over $200,000, it was a personal guarantee. Between $25,000 and $200,000, you're still liable to pay the loan. We have some people who are making changes to their businesses after they got the Eidl loan. You can't make changes like organizational changes, structure. You can't close the business. You can't sell off equipment. You can't relocate unless you notify the SBA of these changes. And people are not understanding what they're signing. Okay, so I just want to make that point.
Absolutely. These are taxpayer dollars, and the US government has the best interest in securing taxpayer dollars. And they, if you get, like Mike said, if you get more than 25,000, they may dictate how you may run your business, at least key changes. You don't have to ask them, hey, boss, can I do this? You don't have a new boss in town, but any key changes that may jeopardize the capital or the money, not capital, the money infused in your business, anything that may jeopardize that. If you're the key person and you say, you know what, I'm done, I'm retiring, it may jeopardize the integrity of the loan, and the government may take action to secure its interest.
That's also true of any equipment, because they
Indeed.
take a lien against the equipment. So you
Indeed.
can't dispose of equipment willy-nilly. You need to inform the SBA of any equipment sales, on top of which the SBA takes a priority interest.
Indeed.
Right?
Indeed. Absolutely.
So you go ahead and you talk about that.
No, absolutely, because now this doesn't mean you cannot change equipment. What they don't want is you selling your business equipment because you're trying to save your home. That's that's commingling. But if you're selling equipment because you need to buy a new one, the SBA needs to be advised of that so that they can put a lien on the new equipment and take an interest in that because you still have an outstanding liability. So it doesn't mean like you're stuck. They want you to thrive. SBA wants you to thrive so they can make the monthly payment, maybe pay them off early, because unlike a term loan, an SBA loan does not have a prepayment penalty. So anything that you have to fire somebody, you want to bring on a new partner, any and all of these changes, you are still entitled. You're still the boss of your business, but you are now a fiduciary to the SBA as well to make sure the funding they provided you is secure and you can make changes with their consent. And it can be bureaucratic sometimes. So this is where it may require planning on your part. So if you're trying to buy an equipment, you want to let the SBA know early on, because we all know many federal and state agencies are facing a backlog. So thank you, Mike, for bringing it up. So that's a term loan, and many SBA loans are also term loans. So keep that in mind. You're borrowing money, X amount of money over an X period of time, but a regular term loan is separate from an SBA loan. Then there's always lines of credit. This is where you only pay interest if you borrow against it. You get a loan, and you don't use that loan at all, a term loan is sitting in your bank, you still owe interest on it, just like the Eidl loan. You may have received 50,000, 5,000, 500,000, and the money may be sitting in your bank account, and you're like, I'll use it eventually. Interest is accruing. Even though the payments are in deferment right now, interest started accruing the day that loan was made to your business. But in a line of credit, the bank says, all right, Joe Schmo, you now have access to $5,000, $50,000. If you don't use that money, no interest accrues. So this is an as needed capital. A lot of businesses get lines of credit that if there's an opportunity or a threat, I have money available to save myself or explore myself as necessary. However, lines of credit, because this is open-ended commitment, they're harder to qualify. When you get a loan, they run your credit, and if your credit is good, bad, or good, they give you an interest rate and you go on your way, you get the money. A line of credit, today you may have stellar credit, and the bank gives you a line of credit. 6 months later, your credit deteriorates. They may or may not know that. They may or may not know your personal finance history. And also the key thing here is a line of credit is subject to be rescinded. When the 2008 crash happened, my dad at the time, who was alive and well and doing well in his business, he was not personally affected by it as much. He saw his lines of credits cut off by 90%, which then did impact his business because his purchasing power in his business inventory went down. Somebody gives you a loan today for $1 million or $10,000, they may or may not be able to call it back unless you violate the covenant. So this is where, when we talk about financial statements, Mike intelligently brought up that you want to watch your financials, because if you violate the financial ratios, it may violate the covenants of a loan and it may be rescinded. But in a line of credit, it could be rescinded at any time with or without any notice. So it's less stable and more expensive than a term loan, but it does offer flexibility. Yes,
So
sir.
on that, you want to match long-term requirements to long-term debt, short-term requirements to short-term debt. So this is typically used for working capital. Working capital is a day-to-day operations.
Correct.
Don't take a line of credit to buy, a 5-year piece of equipment. Do you agree with that?
Yes.
Yeah.
Yeah. Very
It's not
expensive.
it's not a good use of the funding.
Yeah. This is where we're not talking about the equipment financing, but if you are taking a line of credit to buy a piece of equipment, you may be better off getting equipment financing, because then the lender can put a lien on that equipment. This is why car loans, home loans are cheaper than credit card loans, because if you borrow money to buy a car, you don't make 3 payments, the bank can come and repossess your car. But if you take a credit card to go on a vacation to Hawaii, They can't come and foreclose on your Hawaii experience. So there is no collateral. So Mike, you're right. If you are going to use money, borrowed money, use equipment loans for equipment.
There's a question.
Yes.
How does the SBA online relocation in the Eidls work? For example, does it mean moving a new office location with the same zip code, or relocation outside of a different state, or incorporating? So there's 3 separate questions here. This relates to the promissory note. My understanding, GB, correct me if I'm wrong, is that if you move down the street, technically you're supposed to tell the SBA.
Indeed.
But this other one about incorporating, so if you incorporate here and then you reincorporate in a different state, I don't think you can do that.
It depends. Some states allow you to move your entity, some require to start a new one. So this is why each entity is chartered by its own state. So for example, I mean, Eidl is a federal program. Let's say somebody has a PLLC, a professional limited liability company in New York, which allows it. California does not. So can they move their entity? No, there is no professional LLCs in California. So they would have to reincorporate a new entity in California to be, assuming they have the professional license in California to begin with. So this is where, can you move it? In some cases you cannot.
And if you change your legal structure, or you have to notify the SBA.
Yes. And that keyword is notify. You don't always need permission. Sometimes just like notification, hey, I'm moving down the street, which, think about it this way. If you were to move down the street, you have to do change of address anyway with everybody that you do business with. So in some situations, it could just be that, hey, send me any and all future notices to this new address. I am moving. So a lot of times, sometimes my clients make a big deal about this SBA notification. So it's just like, if I used to leave my home to go somewhere, I would tell my mom that, hey, I'll be back in a couple of hours. If I'm missing for a couple of hours, they may get worried. So notification is a key word there.
Thank you. Please continue.
Thank you. So beyond lines of credit, then we have invoice financing. This is sometimes known as factoring. The idea is you have an invoice, somebody owes you money, you use the invoice as a collateral to borrow against. So if somebody owes you 100 grand, you may be able to borrow 80, 60, 50, depending upon what business you do. So invoice financing, factoring and such is easier to qualify. It's usually a very quick turnaround. However, it is an expensive way of borrowing money, because what if someone doesn't pay? There is an insurance out there called accounts receivable insurance. If you're doing invoice financing, you may be required to get that insurance if you don't already have it. This is, some of you may remember the credit default swaps back in 2008 that caused the whole debacle. It was not the real estate. The real estate was not a big deal. It was all the insurance products that were insuring real estate and the loans against the real estate that caused the trouble. So this is why, because invoicing can be fickle, your client could file for a bankruptcy, right? So it's a very fickle thing. If there's nothing tangible except for a piece of paper that is like somebody owes you money, it can be expensive. The terms of what you're extending. So this is why a lot of times I encourage my clients, be very careful what terms you extend to your clients, especially if you're ambitious and you want to grow, because your terms are a legal contract, which may help you or hurt you in the future. If you have a good collection process in your business, if you have good clients, and if you can show the lender that, hey, look, all my clients pay me usually on time, look at my financial records, you will pay less in fees and less in interest. But if you are in a high risk industry, this may not even be an option for you. So invoice financing is something else that a lot of, especially goods manufacturers, use to ease out and smooth out their cash flow. Anything you want to add to this, Mike?
You might receive solicitations for this. I don't know if you get any, GB.
I do.
In which case you should talk to a professional financial person if you want to consider this, because not everybody has the same fees.
Indeed.
There's different terms. and don't do anything, again, if you're not familiar with these terms and the impacts, without talking to someone who's familiar with the terms and how it's going to impact on you.
Yeah, I think On Deck does that, and I know that was, what is that, a Shopify. A lot of these platforms that allow people to sell online, they have their own basically invoice financing as well. So be careful. Sometimes a lot of good people with good business plans with myopic financial needs can get in huge trouble, because these things can be very expensive if you don't shop around.
Right, please go on.
Thank you. So now we talk about the SBA loan. So SBA loans is just another option among the plethora of loan options available to a small to mid-sized business. Why do people like SBA loans? Well, because usually, compared to many other loan programs out there, it requires a low down payment. It also offers the longest payment term. So if you're looking for financing, if your bank offers you 2 years, maybe 3 years, SBA may offer you 5 or 10. Compared to other loan programs out there, they usually have reasonable interest rates. It still may be expensive because somebody is taking a risk on you, that you're a small business, you don't have a proven, or you may or may not have a proven track record. So somebody's taking a risk. So the interest rate may not be great. You may not get prime, but you may get prime and a higher spread. The key here is this. In most cases, the SBA is not giving you the loan. Just like the PPP came from the bank, Eidl came from the SBA. Many loan programs are simply a guarantee from the SBA. You still have to go to the lender, Bank of America, Wells Fargo, or a small lender who is approved to be an SBA lender, and they are giving you the loan. But basically, the SBA is guaranteeing the loan. They're essentially, maybe in some degree, co-signing for you. Because of that, because it's SBA, it's a government agency, they are using public funds to guarantee a loan amount for you. They usually require excellent credit. Now, excellent doesn't mean 720. They, like we talked about a few minutes ago, it may be 650 or higher. Because it's a government program, some of you may remember the PPP loan program was not easy to navigate. I know Ted Hyatt and I, we did weeks and weeks and months of webinars just navigating the PPP program. The paperwork can be lengthy, most likely will be lengthy. So it will require planning and patience on your part. And it is usually, there are a few exceptions, it is usually a longer approval time. Once again, we have experienced recently, most of us, with PPP and Eidl. How many delays, how many heartbreaks, so many things. It is a government program. Expect it. It is bureaucratic. Accept it and expect it. It is, especially during the COVID disaster, a lot of people apply for PPP and Eidl. It backlogs the system. So if you are, now remember, SBA loans are available to you beyond just a disaster, just in a regular good time. So depending upon how many people are applying for these loans will determine how long is the approval process. Accept it and expect it. Plan ahead for it. Work with an SBDC advisor who specialize in SBA loans so they can make your experience palatable, better than what you may experience on your own. We'll talk more about this, but before I go on, Mike, anything you would like to add to that?
Yeah, it's a guarantee, and I think some people think the guarantee is 100%.
No.
It's not.
We'll talk about that briefly.
Yeah,
Yes.
okay, go ahead.
Perfect. So what is SBA? Let's get a simple definition out. SBA, if you don't know, don't be ashamed. A lot of people don't know definitions usually. SBA stands for Small Business Administration. It is an independent agency of the federal government, and it is the only cabinet level agency dedicated to small businesses like yours and mine. Its mission is to help Americans start, build, and grow businesses. So they offer counsel, capital, and expertise. So some of you may come across a lot of SBDC and SCORE and even SBA advisors who are there to help you, guide you to grow your business, because the idea is if more people are thriving, the economy is doing better, the country will do better. It also helps during disaster recovery. So if there's an oil spill or some other declared disaster like COVID, it has special loans to help people navigate an economic injury. This is why EIDL, economic injury disaster loan. And they also help with government contracting. So it's a behemoth of a government federal agency designed, like I said, to start, build, and grow businesses for an average American. So what is an SBA guarantee? So when we hear of SBA loans, as Mike brought it up, it's not 100% guarantee. You are expected, depending upon the loan program you're going after, we'll talk about that briefly in a few minutes. Depending upon what you're going after, you have to put your skin in the game. And so what the government through the SBA is doing is they're essentially guaranteeing repayment to the lender. So this is why a small business lender or a large bank may not want to lend you money because you are new, maybe not established enough, maybe you're not doing everything right. So SBA is guaranteeing the loan, which is repayment to the lender, which means, what if you default? If you default, the lender will submit the claim to the SBA. The SBA will pay off part of the loan, and they will come after you for the remaining balance. And how will they come after you? They will first make a request to you. Hey, Wells Fargo, Bank of America, Joe Schmo told us we guaranteed a loan for you and you stopped making payment. What's up? And you can make your case to the SBA. This is what happened. Maybe your business went down for XYZ reason, whatever the case may be, you have an opportunity to make your case to the SBA, depending upon what loan you have. And you may be able to negotiate a smaller payment. It doesn't just go away. You have to pay it back. So you may be able to negotiate a longer term or a lower payment for now, or whatever the case may be. It's like any other negotiation. If you are unable to pay, period, then the SBA will turn over the loan to the US Treasury. They look over IRS and all the finances of the US government, and they will collect by garnishing your wages. So maybe your business went kaput and you went to go get a job and you're not paying off this loan, your wages may be garnished. Just like if you owe money to the US Treasury via the IRS. IRS says, hey, Treasury, this person owes us this much money in taxes, they're not paying, collect on it. They're the ones who garnish your wages, or they put lien on your property. They may put levies on your bank account. They may take away your tax refund. They have many, many tools available to them to collect on this debt that they guaranteed and you failed to comply for a variety of reasons. Doesn't mean you're a bad person. Bad things happen to good people. It's the government's money. It's public funds. They want it back. Before I go on, anything you want to add to that, Mike? Sorry, so you're muted.
You'll discuss bankruptcy a little later?
No, I didn't. No.
Oh, okay, so
if you want
I'll
to actually touch on that right now.
Yeah, touch on it right now. Go ahead.
Yes. No, please, you go ahead.
So this is a loan.
Yes.
To a business, personal guarantee. You always have the option for filing for bankruptcy.
Correct. And
these loans, including EIDL, are dischargeable in bankruptcy, but that has a huge impact on your life.
Correct.
First of all, I don't think you'll ever get another loan from the SBA.
Yes.
A lender, right?
Yeah.
And it carries consequences for your personal credit, et cetera. In my opinion, I don't think it's wise to declare bankruptcy when you have an SBA loan, but the option is there.
Yes. And American Express is one of those companies that if you don't pay them, they will blacklist you. And SBA is another. This is why a lot of people, when they were requesting EIDL loans and PPP loans, one of the contingency was, have you ever defaulted on a loan? They asked you that, and a lot of people didn't get that. So now, do private lenders won't do business with you? No. If you file for bankruptcy, if you do everything right afterwards, because like I said, the privilege or the right to bankruptcy is protected by the US Constitution. This is why if you ever get into a financial trouble, you have to go to a special court. You can't just go to a regular court and file for bankruptcy. Go to a special federally chartered bankruptcy court to have your case and make your case that I am insolvent and I need a discharge from all of my debts, because back in the day in Europe, there used to be debtor's prison. If you owe money to somebody, they will put you in prison. Our founding fathers didn't want to have that for our citizens. So this is why the bankruptcy is protected by the US Constitution, and a private lender may choose to do business with you again, but the US government will not, most likely will not. And some private lenders like American Express will not do business with you if you default on them. So be mindful, bankruptcy may have long-term, even though after 10 years it will fall off of your credit history, it is still a public record for the rest of your life. It is not, and this is where the key distinction sometimes people forget, just because it's not on your credit report doesn't mean it never happened. It is still a public record for the rest of your life.
So I think you answered the question, can you get an SBA loan if you previously filed bankruptcy? How about if it's been discharged?
You may be if SBA was not part of that discharge.
Okay. But if you had an SBA loan or any like federal loan and you declared bankruptcy, you may not qualify for government contracting either. Government contracts.
Yes, absolutely.
Federal contracts.
Absolutely. I have one of my clients in the East Coast a couple of years ago. They were forced into bank. I think I told the story once before, by their high school friends over a stupid clause, because they want the friend was a prime contractor. They wanted him to be forced into bankruptcy, so he'll be disqualified from government contract, and they wanted to take over his business. So, you know, friends and family, sometimes, a lot of times my clients say, well, GB, I run my business like a family. I'm like, yeah, good luck. Do they fight?
Yes, exactly.
Sometimes family fights nasty, so be careful. But yeah, so there are different provisions. This is why, Mike, you so eloquently brought up when we're doing financial ratios, that be careful how you run your business, because there could be covenants that you may be accountable to that you may not even know. So read the darn contract, bring it to an SBDC advisor, take it to a lawyer, know what you're signing your name to.
Exactly.
So
please go on.
Absolutely. So different types of loans. We'll talk about these. So there are many different types of loans available out there that are guaranteed by the SBA. Of course, the ones that many of us, because a lot of people don't even know what SBA is. They never apply for a loan, or if they do, they never get a loan. But in the last 2 years, a large majority of the American business population got SBA loans because of the special disaster known as the COVID. So they got the PPP and Eidl loans. So those loans are out there. They're now closed. Many of us already received the email that the Eidl COVID-19 has been exhausted. PPP ended last year, but they may come back, God forbid, if there's another disaster. The most common loan out there for SBA is a working capital loan known as the standard 7A loan. It accounts for about 80% of all the SBA loans that are guaranteed by the SBA in an average year. Sometimes more, sometimes less, depending upon how the macroeconomic issues are working out. And the standard 7A loans has its own variety of categories, such as the small loan, which is considered to be $350,000 or less, and is usually faster to approve. There's the express loan, which is the fastest turnaround. And then there's the export for the exporters. There's a special loan for up to $500,000, and exporters are always near and dear to the federal government because of the balance of payments. So if you don't know, it's an economic term. I'm just putting it out there as a cliffhanger. Look it up. It's I love economics, so that's where that comes from. There's also the export working capital, a short-term loan, maybe 3 years, maybe 4 years, up to $5 million. Then there's a loan for the veterans. If you're a veteran and you are a business owner, you may qualify for the Veteran Advantage loan up to $350,000. And then there's a cap lines business line of credit. We'll talk more about these very briefly, but all of these special programs fall under the 7A loan out there, which we'll talk about next. But before I talk about the 7A loan, anything you want to add to that, Mike?
I saw a question about interest rates. So the interest rate is dependent upon the program.
Exactly.
It varies. It's prime plus some sort of spread, as GB said.
Correct. And the prime rate fluctuates. So right now, many of us know the Federal Reserve has been increasing interest rate. This is why a lot of people have seen their mortgage interest rate gone up. So some people refinanced last year, they got great attractive rates. Right now, mortgage rates aren't that great. So Mike, you said it correctly. Many of these loans, they have a prime rate, which is set by the federal government. Prime rate basically means if you're a prime top business owner, borrower, this is the rate that they usually pay. And maybe then there's this added spread to it. It could be prime plus 5, prime plus 3, prime plus whatever. That is contingent upon how long have you been in business? How good is your credit? How long are you borrowing money for? How much money are you borrowing? And many other different criteria that the bank will use. And this is set by the bank, the lender, whomsoever you're borrowing money from. They, within the guidelines of the SBA, set that interest rate. This is why I mentioned earlier, SBA loans have more reasonable interest rate because the federal government is guaranteeing that loan. So they also hold the lender to certain guidelines so they don't charge you too much. But what is too much? It depends. So the 7A loans, the most common loan with all the other sub loans that we talked about, these loans are available to an average small business owner up to $5 million. So MM stands for million, so up to $5 million. But remember, I said, if you want a smaller loan, it's usually even faster to fund. If you want $5 million, expect a lot of paperwork, expect to have your finances all cleaned up, expect to have great P&Ls and balance sheet to provide to the lender, and expect a long time for it to be approved. Sometimes months. It can take months to be approved. The general term is about 7 years, sometimes more, sometimes less, but that's a general term for working capital. If you just want money to run your business, most businesses are in debt. Most governments around the world are in debt. The world is built upon debt. And if you want some debt to have an advantage over your competition, to work your business, 7-year term, prime plus whatever rate. If, however, you're trying to purchase equipment or real estate, well, you may have 10, or actually the real estate is usually 25 years. So that's a typo on my part. I apologize. Because why? If you're just doing working capital, you use it to make payroll, buy inventory, or refinance debt, the government has no recourse. But if you're purchasing equipment, they can come and take your equipment. So they offer you 10-year term, maybe with a better interest rate. Real estate is even better than equipment because you can pick up your equipment and run with it. Good luck picking up your building or your office space and running with it. So they offer you 25 years and even better interest rate because real estate is attached to the ground, assuming it's not a mobile home or something, because that could be deemed an equipment or a tool or something else. But real estate grounded with a foundation, better rates, longer term. You do need a FICO of 650 or above. That's what I've been hearing. You do need to be in business for at least 2 years, and you need solid financial because they will look at your DSCR, your debt service coverage ratio. That if the lender gives you this money with the SBA guarantee, do you have enough cash flow to pay them back? If you're already in red and you're trying to get out of it, you will have a harder time qualifying. You may qualify by saying, hey, give me this money. I will refinance my debt, pay off my on-deck loan or whatever loan I have at 30%. The money that's left over, I will be able to cover my principal and interest payment. So in that case, you could be in red, and based upon your strong financials, you may qualify for a loan, but you need a good SBDC advisor on your side to make that case for you. Anything you want to add to the 7A loans, Mike?
Well, for all of these loans, documentation, as always, is key.
Indeed.
Right?
Indeed.
Tax returns, for example. You say
Yes.
2 years in business, 3 years in business. Tax returns for the business, tax returns for personal purposes, right?
Indeed.
Plus
This is why-
financials, right? The solid
Correct.
financials for not just 1 year, 2 or 3
Correct.
years.
Indeed.
Okay.
I remember Mike has sent me over a referral, and the person was trying to get an SBA loan, and they were in negative only because they made an accounting change. Their business didn't change, they just made an accounting change, and the Eidl SBA advisor just freaked out and they declined the loan. Then eventually they had to make a case, and they eventually got it, But a lot of times the people, the underwriter approving these loans, they don't know your business. They may not be accounting professionals. They are just there to give you a rubber stamp, yay or nay. So you have to make your case. A solid financials is important. This is why one of the things I always ask my clients is when they come to me, gee, we do my taxes, great. What is your exit strategy? What is your growth strategy? Because I could accelerate some of the deductions, lower your taxable income, but now you cannot qualify for a loan. So you save $10,000. Now you're shut out of $100,000 loan. Is that a good business decision for you or not? Only you can decide as a business owner. My role as an advisor, I advise, like any other SBDC advisor, I don't make decisions for you. So solid financials, including tax returns, are imperative.
We do have a question, GB.
Yes, sir.
Generally speaking, can businesses apply for these 7A loans for equipment or real estate if it already has an EIDL loan, which is for working capital only?
I would say generally speaking, yes.
Yeah, I believe you're correct. Of course, so long as you can make the debt service.
Exactly.
If you have other loans in place, by the way, the SBA takes priority.
Indeed. So this is where sometimes your other lenders may not want to be in a secondary position. So this is where you want to be careful that you are not getting SBA loan and violating the other covenants. You may borrow $300,000. Now the other $500,000 that you owe, they're like, hey, pay us back right now. You violated the covenants. We're now subprime or we are now subordinated. We don't like that. We don't want them in this position.
Yeah.
So be careful. You may end up with a much bigger trouble on your hands. So be mindful. This is why
talk to your lender.
Sorry.
Talk to your lender. If you have a outstanding loan, talk to your lender.
Yeah.
Right.
Your lender wants to know what you're doing. It's their money.
Yep.
Then there, after 7A, then there's a CDC 504 loan. This is not a rare breed. This is harder to qualify for, but because a much bigger loan. CDC stands for Certified Development Company. When you are doing a CDC 504 loan, you are buying a commercial real estate, a big building, not a fourplex, none like that. You're borrowing to buy a commercial building or a commercial real estate building with maybe 25 apartment units or something. You're applying for two separate loans. The bank is giving you up to 50% of the loan amount using their own private guidelines, whatever they choose to be. And the other 40% usually is coming from, like I said, a CDC, a certified development company, which is usually a nonprofit aimed at creating jobs and promoting development in a certain geographic region. And they are the ones who are going to give you this 40% loan using SBA guidelines. So you're applying for two different loans. And the 10% is coming from you. So you must have skin in the game. 10% from you, 40% from CDC, and 50% from a private lender. You again must have a FICO score of 650 or above, but this is where the private lender may say 720 or above, 680 or above. They set their own guidelines. The property, whether it's apartment buildings or a commercial office building or a strip mall, whatever you're buying, commercial property, commercial real estate, must be owner occupied. And there may be other covenants where you have to create jobs or retain a job or meet some other public policy goal for which the CDC was established for. Because remember, their aim is to create jobs and promote development. This is where, think of like the public-private partnership when people build a stadium or they build some other big, huge infrastructure. They use public funds, but they also have to have private funds. That's what you are doing basically on a smaller scale with the help from the SBA. That's a CDC 504 loan. Anything you want to add to that, Mike?
Yeah, the SBA is not interested in funding speculative ventures.
No.
So if you're looking to buy an apartment building, this is not for you.
Correct.
Owner occupied means that you are, let's say that you have a retail store and you want to actually buy the property from the landlord.
Correct.
That's what they're talking about here.
Exactly.
Sometimes we get people coming in and say they want to speculate on real estate purchase. No, the SBA won't do that.
Correct. They're not designed by the federal government to do so.
Right. Okay.
Perfect. Then there are microloans. These are usually designed for small businesses, very small business, maybe one owner, maybe just no employees, a small consultant, tax preparer, anything. You're a small business, you just need about $50,000. You're not looking for $250,000, you're not looking for $1 million, you're not looking for $2 million, you're not looking to buy a commercial property. You just want some money to grow. This is one of the few loans that is funded directly by the SBA via a nonprofit local intermediary. So this is where you may have a local bank or a local community bank or local something that is borrowing from the SBA. So they're borrowing maybe 5 million, 3 million, whatever. So they're borrowing from the SBA, and now they're entrusted with taking that $5 million and give 50,000 here, 10,000 there, 20,000 there, whatever the case may be. Most large banks, Chase, Wells Fargo, whatever, they're usually not interested in small loans. This is why a lot of people who receive PPP loans, eventually last year, a portal was set up that if you got a small loan, you know what, just go to this portal and apply for the SBA forgiveness directly with them. The lender's like, you know what, we don't want to be part of this. They were part of it, PPP1, not PPP2. So this is a similar setup where the banks are saying, we don't want it. A local intermediary says, all right, you know what, we'll work this little niche. SBA give us 5 million and we'll divide that up among many, many, many small borrowers. 5,000, 50,000, 40,000, 50,000 is a cap. And each intermediary has its own qualification guideline within the SBA guideline, but they may have their own credit score, their own collateral, their own whatever. This microloan is purely a working capital loan. It cannot be used to purchase real estate. This is why a lot of the Eidl and PPP loans came with the covenants. You can use it for payroll, you can use it for this, this, and that, not to buy real estate. And you cannot refinance debt. So you can't just say, give me 50,000 so I can pay off my credit card. It doesn't work that way. And it does require a collateral and personal guarantee. Almost all of these loans, especially all the SBA loans, require a personal guarantee. So remember, you will be on the hook. So be mindful of that. Anything you want to add for the micro loans, Mike?
No, that's good. There are a number of folks that we know that actually serve this purpose.
Indeed.
So if you're interested, come talk to us.
Absolutely. Don't go to Google, go to Mike or any other advisor. Then there are also, now these are some specialized loans. I'm just bringing them up very briefly so you know what else is out there. If there are loans by SBA for home and personal property up to $200,000, if there is a declared disaster. This is why you may remember, you may know from news, whenever there's a wildfire, the president declares it a disaster area. It needs a presidential authority to be declared a disaster area so that if anybody's house is burned off or their personal property was burned off, they need to rebuild up to $200,000 to make repairs after a declared disaster, not by the governor, by the president. So there are two different declarations that can marshal different resources on the state and the federal level. SBA is a federal agency, requires a presidential authorization. And these are the loans that can be used to repair your primary residence only. And then there's an additional maybe $40,000 for personal property, furniture, stuff like that. Just to, again, EIDL, economic injury disaster loan. There's an economic injury because of a disaster. Here's your loan, go rebuild your life. That's what that is for. And then along with that, there's also the business physical disaster. Physical disaster, this is where some loans were made out last year for physical disaster that happened due to many protests that erupted across the nation. So there is an ongoing business physical disaster loan. Again, requires a presidentially declared disaster up to $2 million. So remember, 200,000 personal residence, 40,000 personal property, business up to $2 million. And it can be used for business assets only, such as maybe you own the real estate and it got damaged. Maybe you don't own it, Maybe you lease it, so your leaseholds were damaged. You have to rebuild a restaurant at your landlord's place. Maybe you have to replace machine and or equipment, fixtures, inventory. The list goes on and on. That there is a presidentially declared disaster area. You have been hurt economically by that disaster. This loan is available to you. So it could be an oil spill. So we hear about all that stuff. Local businesses affected by the oil spill can tap into this loan program to have a chance towards survival. And then there are special loans. And I'm sorry, Mike, do you have anything to add, sir?
Yeah, insurance. Insurance won't necessarily cover these disasters.
No,
They often have exclusions.
they do.
Now, if you suffer from flood, then you should have flood insurance, right?
Correct.
If you have earthquake, have earthquake insurance. But these thresholds, $2 million, that might not cover your damages.
Yeah. And even insurance companies can drop you. I mean, there were a lot of wildfires in the Trabuco Canyon a few years ago. AAA, all those houses out there, AAA will not insure any of the houses in the Trabuco Canyon. Also, many of the other insurance agencies last year got out of it. So now they actually have to go into a special, expensive, government-funded insurance fund to insure all of these homes in Trabuco Canyon and many other places. So just because you have insurance, they may drop you. It's just a contract.
Exactly.
So,
so there are insurance policies in place now that exclude COVID.
Indeed.
And virus issues.
Yes.
So once again, read the documents.
Yeah.
Okay.
Exactly.
Thanks.
This is why a lot of times people say, well, I have a general liability insurance, and if I have an independent contractor working for me, am I okay? Maybe not. Because your insurance may say, show me their general liability. So sometimes if you hire an independent contractor, they must have their own insurance so that if something happens, the two insurance companies will fight who will pay for that damage. If your insurance company says, you know what, they're at fault, we will not support that claim, we're denying, go to their insurance company, and that independent contractor doesn't have insurance, you're on the hook for that money. So be very careful. But so this, and be very careful. That's the whole thing Mike and I are trying to suggest. Be careful. Insurance products can change. They will drop you because, again, at the end of the day, the insurance company's job is to be a good fiduciary for the members. So AAA is a member-owned company. They don't want somebody else who's nowhere near that Trabuco Canyon to have their premiums go up. So they just drop the whole Trabuco Canyon area. So they have a fiduciary responsibility to other members. And if it's another insurance company, they have a fiduciary responsibility to the shareholder, all these hardworking people who through their 401ks and IRAs are buying that insurance company stock. If they're not a good fiduciary, they're not managing their risk, all of these 401ks and IRAs will drop in value and people's retirement account will be in jeopardy. A lot of people don't realize 80% of the Wall Street is controlled by 401k IRA money. So be careful. Right. So this is why the insurance, read the fine print. And the last loan I'm going to talk about, we only have 5 minutes remaining, is a military reservist EIDL, which is a loan, a specialized loan for small businesses if their key employee is now on active duty. So I'm the key employee of my business. If I was in the military, even as a reservist, and if I'm activated to go overseas, my business may suffer because I'm the key employee. So my business can borrow up to $2 million to smooth out the cash flow. So maybe hiring somebody to replace GB while he's serving the country, and that money can be used to pay salary for that employee. A lot of times I don't take a salary. A lot of small business owners don't take salaries. We brag about not taking vacations. You don't do that to a key hire. You don't tell them, well, you know what, GB never take a vacation, so no paid time off for you, no sick leave for you. You're violating HR laws. No other employee may work for your business in that capacity. So this reservist EIDL loan is used by small businesses to hire somebody.
Right.
Keep the operations going. So the fortune favors the brave. That's what Virgil said. Borrowing is scary for a lot of people. And we always tell our clients in my private practice and through SBDC, be a responsible borrower. And if you are, there are tools and products available to you from the SBA to weather the storm or even capitalize on your ambition, as long as you have a good business plan, good financials, and a good head on your shoulder. With that, I'm done. Mike, what would you like to add, sir?
Two things. For those of you who want to start up, there is an opportunity to get an SBA back loan, but there's all sorts of requirements that need to be met. Talk to us. As always, just talk to us.
Indeed. We're here to help.
Eidl, yes, you mentioned that the funding is exhausted. Keep in mind that the loan documents must be submitted by May 16th. If not everybody will sign off on loan documents, which means that the money may come back into the program, some of the money. And if that happens, it may be reallocated out to those who didn't get it. We at the SBDC really can't help you in working through the issue, given the fact that you didn't get the loan. We have no influence. There's nothing that we really can do. And we know there have been a lot of people who have been struggling, GB, I'm sure you've been dealing with it too, trying to get the loan for all sorts of reasons. We're hoping that it gets refunded. We don't know. The Restaurant Revitalization Fund, the renewal or the refunding has passed the House. Hasn't passed the Senate yet. Don't know if it will. Don't know if the president will sign it. There's also the California Rebuilding Fund, which we could talk to you about in a one-on-one advising session. So with that, GB, I have nothing else.
Perfect, sir. I hope this was valuable, and we'll talk about something else next week.
Yep. Okay,
Cool.
Great. Thanks so much.
Very much. Thank you, Lauren. Thank you, Mike.
Bye. Bye, everybody. Have a good day.
Take care.